Ladies and gentlemen, Greg Mikulowski from ForexLive.com. Today's date is July 2nd, 2024. This is a Kickstart video where I take a look at three of the major currency pairs, the euro versus US dollar, the dollar versus yen, and sterling versus US dollar from a technical perspective to kickstart your trading day in the North American session. So let's get started. Looking at the 4-hour chart of the euro versus US dollar, yesterday we were looking at this swing area through here, this yellow area down to the 61.8% retracement of the move up from the low price that we saw in April to the high price that we saw at the end of May, early June, and that 61.8% retracement did hold support in trading yesterday and trading here today. The price moved higher, but we did find a resistance as sellers eventually near the high of this swing area up here at 1.07346, and we started to rotate to the downside over the last 8 or so trading hours. In the process, the price moved back below the 100 bar moving average of the 4-hour chart and also moved below the 61.8% retracement level here at 1.07208, but as you can see, the price has rotated back into the yellow area right through here on the failed break to the downside. Now, why did the price bounce off of this area right through here? And if we go to the hourly chart and take a look at that, you can see these two moving averages. This is the 100 and 200 hour moving averages, and as you can see, they are both converged near the 1.07128. The price did move a little bit below those levels, and that's momentum moved below this yellow area right through here, but could not sustain and quickly rebounded honestly back to the upside here and rotated back within this yellow area. So there was a little bit behind the scenes type of support that the price needed to get to and through, in addition to the 61.8% retracement, in addition to the swing area through here off the 4-hour chart, but it couldn't be done, and the price rotated back to the upside. So the battle still goes on with support here at 1.07122 area and resistance up at 1.07346. If the price can get above that 346 level and stay above that level, it could look back toward the 50% of that same move up from the April low to the May-June high, end of May, early June high. That level comes in at 1.07579. Let's take a look at the dollar versus yen. We've moved to the highest level since 1987, 1986 in trading yesterday, and this is the 4-hour chart. And the high price today also stalled against that level in fairly modest and limited trading today. The high price, new high price for the dollar versus yen, going back to 1987, is 161.736. The current price trades at 161.493. Let's dig down a little further and take a look at the hourly charts, because when you have these, we're trading at new record levels. It's where the market changes its spots, if you will, where the sellers start to win a battle or two or three. And so when you look at the hourly chart, we have the high price that we saw from Friday's trade at 161.27. Admittedly, trading yesterday, the price did fall below that level and then rebounded back to the upside. And trading here today, the low prices remain comfortably or more or less comfortably above that 27 level. So we do need to get below that level. We also need to get below the 100-hour moving average in trading. Back on Friday, the price did find support against that level here. Here it was early buyers against a level here. It was early buyers against a level here. It was early buyers against a level. You have to go back to June 14th, the last time the price traded below its 100-hour moving average. So getting below the 100-hour moving average is another key level that would show that the sellers are taking back some control. And finally, the level that is important as well to me is at 160.208 level. It's called 160.21, and also this rising 200-hour moving average, which we need near that level shortly. That 160.21 level was near the low prices from Friday and again on Thursday. We broke above it on Wednesday of last week, and initially had some issues staying above that level, but then reestablished that support against that level, moving to the upside. Now, the importance of that 160.21 level, I have to go back to the 4-hour chart, and if I look at that, the high price going back to this day right here, this is back to April 29th. That high price came in at 160.21. So we broke above that level here, and then came down to it and tested it here and here and here. It also represents, by the way, the 50% of the last move to the upside from the low price that we saw in trading last week to the high price that we saw here today. So you can see the importance of that level. So those are the targets to the downside. that need to be broken in order to give the sellers in the dollar versus yen some hope. Absent that, and we're just trading at 1987 highs and continuing to trend to the upside. So be aware of those levels, starting with the going to the hourly chart, starting with the low price that we saw, or the high price that we saw in trading on Friday's trade, and moving to the 100-hour moving average, and then to the 160.21 level. Finally, let's take a look at the sterling versus US dollar. We'll look at the 4-hour chart, because the low price in trading here today was the low price, or near the low price from trading last week. And we did find support buyers against that level of price, rotated back to the upside, and traded back above the 100-day moving average, also back above the broken 38.2% retracement that's moved to the upside. So in trading yesterday, we talked about that 38.2, how we needed to get and stay below that level. Couldn't do it again, so each of the time the price has gone below those levels, we found support buyers and there may be this swing area down here between 129.94 and 126.137 that would need to be broken. If we do that, we get below the 50% and the 200-day moving average would be the next targets on the downside, but it wasn't. We keep on finding support against that swing area, against the low from last week, and rotating back above the 100-day moving average and 38.2% retracement. So the buyers in the short term are probably a little bit more in control now in the sterling versus US dollar, with those failures and the break back above those key technical levels on the top side. We do have this swing area between 126.74 and 85, and then we get to the falling 100-bar moving average on the 4-hour chart, and the 200 and the flattening 200-bar moving average on the 4-hour chart at 126.91 and 127.13 as the next targets, respectively. Get above those levels, opens the door for further upside momentum. So that's a Kickstart video for today, July 2nd. I hope you found this video helpful. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.